Okay, so coming up next, we've got Ewan Webster from Thesis Gold, who's the CEO and president. They're working on the ranch and now lawyers project because you've had a merger recently, which makes for a very interesting case that you guys got going forward. You're in the Golden Horseshoe. You've already got quite a bit of gold outlined already, so take it away.
So a little bit of bait and switch. I am not Ewan. I am Ian. I'm the COO of the company, but as background, I'm a mining engineer, so a little different perspective and a little different take on the overall presentation with 25 years working in the industry. So thanks for a wonderful introduction. Obviously, lots of forward-looking statements. But for those of you not familiar with the project, I just want to set the setting. Thesis Gold is located what we call in the Golden Horseshoe. Many of you are used to the Golden Triangle, but the exact same geology on the other side, but with some very, very, very distinct advantages. The first is the location. As you can see, both the ranch project and the lawyers project together. This is the result of the acquisition and merger of Thesis Gold with Benchmark Metals. But one of the distinct advantages on being this side is first, we're above ridgeline, not a lot of trees, great infrastructure. You can see we're 45 kilometers from the old Commodities mine. We have a road that goes directly to our sites, so we don't need helicopters to support our drilling. So the infrastructure is in place. This road is good for 70 tons, which would support a mine build. And the only real infrastructure required is a future power line. That's about 45 kilometers between the substation at Commodities. And we're in the shadow of the mountains and only see about 1 meter of snow a year. So those who are familiar with projects normally in the BC area, they normally see a massive amount of snow. It's a big headache, and that's really not an issue for this project. We could support drilling all year round if we wanted to. So it has so many things going for it in terms of locations to put infrastructure and infrastructure in place to be able to support a mine build. So that as background, kind of wanted to set a stage. When Benchmark and Thesis merged and combined two assets, this was kind of our starting point. And the starting point was a PEA on the lawyers project only, and based only on an open pit scenario. So the starting point for this project was a pretty robust project, looking at about a 600 million after-tax MPV, 24% after-tax IRR, pretty quick payback, et cetera, et cetera. But obviously in this market, you need much more than just an okay project. You need to have a spectacular project. So we really looked and said, what are the ways that we can convert this project from this point and create it into a spectacular project? And in a bad market, make sure that every single dollar that we spend is creating a better project and creating significant value for our shareholders. And so that's really what we went into 2023. That was our objective, and we identified two key areas that we can make a significant impact with the work that we do. And we went out for our 2023 drilling program and wanted to change this graph. So this is kind of the major issue with the lawyers project. You see some upfront decent ounces coming out of the ground, but it's really the end of the project seeing the best production. It's kind of the opposite of what you're used to seeing on many projects, that some start off at 5 grams and end up being 1 gram by the very end of really high production, and then it really peters off. In this case, your best production is actually coming at the end of the project. And obviously, based on discounted cash flows, this is not really getting and hitting the bottom line of the project. How can we convert this and bring those ounces forward and bring higher grade ounces towards the project? And the first area that we identified, and we said, okay, we want to make sure if we're drilling, we're adding value to this project. And the first place we identified, if you look at this drawing, this is the lawyers project. You can see all this mineralization occurring below the bottom of the pits. So this is basically the area of lawyers. You have the Cliffs Creek, you have Duke's Ridge, and you have over on the east side, you have AGB. But you see all this mineralization below the pits. And we said, this is an area we can make a massive improvement. This is mineralization that occurs hundreds of meters below the bottom of the pits. And so we said, we want to make sure that these ounces can be pulled into a future project. And you can see on the drilling that was done this year, some of the results that have already come out. At Duke's Ridge, we were very excited, saying 53 meters at over 3 grams, including over 16 meters at almost close to 10 grams. And why are we so excited, especially coming out of Duke's Ridge? Is because we have a major topography advantage at this project. You're seeing at high plateaus, no real trees, but there's these valleys, and right straight from the valley, only 400 meters away, we can get to the bottom of that, the pits currently at Duke's Ridge. So we're not talking shafts, we're not talking big spirals, we're talking a very low cost adit into the side of the hill, only 400 meters. This entire adit is probably about $3 to $5 million. We can start pulling those ounces out of the ground very early in the project life and bring higher grade ounces into the project. The average grade at the Lawyers PEA was 1.5 grams per ton. A little bit lower than that, but pretty close to 1.5 grams per ton. In this area, we're targeting about 500,000 ounces, but between the 4 and 5 grams, okay? To put that in perspective, each gram that we can add in 1 year is an additional 100,000 ounces and at least $150 million that can hit directly to the profit in the early years. So we know, and we've done it internally, we've looked at all the ways we can do these strategy, what can make the major improvements. We're not talking about small incremental improvements to a project, but transformational improvements to that base project. But the other obvious answer is the Ranch project, which is a little over 20 kilometers from up to the north, and actually downhill to get down to the Lawyers project. We're seeing in the past years extremely high grades very near to surface. So the second objective we had with the drilling that we did this year was to delimitate its maiden resource at the Ranch project, but really focusing drilling on near surface material. Okay? We recently just put out a press release. It was 25 meters at over 5 grams, but the most important part, starting at surface. Getting near surface high-grade material and feeding it into the early stage of the project will make a massive difference. I want to really stress that it makes a significant difference to the overall economics of the project. So if we look at it on a broad scale, we started the year, we came up with a strategy, we knew what we wanted to drill, define that underground resource at Lawyers, identify a maiden resource at the Ranch project, bring that all together and create a new project. Okay, so we've done the drilling, we've completed that drilling, about half the results are out to date. The next stage is to do an updated resource based on a global resource between the two projects. We're targeting and looking to get to that 5 million mark, which we also think is a significant benchmark within industry to say when you get a lot of eyeballs coming towards the project. And we think that we can achieve that with this drilling. After that resource, which we believe will come out in the April time period, is to take a relook and update the existing PEA. And again, showing now much larger resource, but also a significant improvement in the overall economics of the project. So those are two significant catalysts. We are funded to achieve all those goals. We still have half our drilling coming out, new resource, and an updated PEA. And so we're very excited, and especially if I was a potential investor sitting in the room today, looking at this type of company, seeing where our pricing is today, market really hasn't had the chance to understand what the vision and the direction of the company is. So we know that these are going to be transformational events within the company. Be able to get to those types of ounces in total resource and get to the updated economics based on a transformation of how it overall looked. And I don't want to skip over really the other key component when you're looking at permitting, environmental, social issues, really is the relationships that you have on the ground. We have a very, very close relationship with what we can call here the Takla Sekedene and Quadacha First Nations, together the TKN. We've been working with them for over 3 years. We identified this early in the projects that this is a key component and started our engagement with them very early in the project and involving them over the last 3 years. And during our drilling seasons, we meet with them on a weekly basis to discuss how we can co-develop. Last year, we had 220 band members working on our projects. They own the heavy equipment on site. There are environmental monitors. They're doing the baseline work. There are partners totally and completely on the environmental component and see this as a way of how they can co-develop. They've come out multiple times saying, we want to see this become a future mine, and many times they push us to move faster, but they want to work to develop this project together. So I think, and I'll come back to that. So if we look back and look at the type of project that we have today and where it is going into the future, the merger has been transformational, but only in the ability to execute on making a much, much better project. The infrastructure is in place. The drilling is now complete. We're financed to get over these very significant hurdles of getting out the resource estimate and doing an updated PEA, which we expect to come out in August of next year. And finally, the question always gets asked is looking at the overall share structure. One of the things you'll notice is a very, very high component of institutional shareholders with Equinox, Delbrook, Merck, Franklin, Van Ex are big parts of this project because I think that they understood the project from the very beginning and what can be done with this overall project, right? And from this point on, I think we have plenty of room to make significant growth in the company. Questions?
You have any questions from the audience?
How many people are on this payroll?
Sorry, I can't.
How many people?
People are on the payroll. How many people are
Technically, 0.
okay?
But in reality, at any one time, we have about five full-time employees. So we're very tight in how we manage the company. And moving forward, that team will probably grow, especially now we're looking more at the project development. But we have a very strong team. Ewan is a PhD geologist. I'm a mining engineer with 25 years of background. We have some of the key components. I personally have been involved in projects that have become future mines multiple times. So we really bring that experience to the table, but try to manage as tight of a ship as possible.
What is your cash position?
So today, right, we just finished our drill season, so there's a lot of accruals coming back in, so I like looking end of year. How do we look at end of year? End of year, we expect to have about $9 million in the treasury, and that helps us get through updated resource, continue our baseline work at both sites. It's something I skipped over very quickly, but from an engineering and environmental perspective, this is a very advanced project despite only having a PEA because 2 years of baseline work is already done at Lawyers. We expect about this time next year to have that 2 years complete. Also at the Ranch project, 95% of the resource at Lawyers is already in the M&I category. So these types of questions of how many people and what kind of burn, we have the ability to create a significant amount of value just by updating and making better the project through desktop work because so much of that base environmental and engineering work is already really complete. So $9 million by the end of the year should be able to get us through some of these very important and key catalysts and also allow us to be a little bit manageable on what is going to be the size of our program that we're going to do next year and really focus on, again, doing what we did this year. Have a strategy, know what we want to achieve, know what we want to do to be able to create value for our shareholders and make a better project and execute on that. And I think we've been very proud, although it's been a very difficult market, on executing on what we said we did, and we look forward to seeing those fruits when we do the updated resource and do the updated PEA.
The drillings, you have a lot of drillings in Q3.
So our 2023 drilling is complete for this season. We've completed it, so the objectives we had, I think we've achieved them with being able to put out a new resource coming out in April of 2024. Then we want to make sure whatever additional financing that we do for any additional drilling in 2024 will be after these catalysts have already been achieved, right? So, and I believe, Whatever you say about the market, we went in saying we want to be able to create value. We want to be able to create a better position for our company independent of market. And I think that we'll be able to achieve that with the updated resource estimated, updated PEA, so that when we're doing additional financing for whatever additional drilling we need to do, it'll be at much higher prices and way less dilutive.
I probably got one small question. Like, often mergers are done for synergies. This is more about making the projects, more viable together. Are there any synergies that you're going to get from this combination?
So the combination is complete, and I didn't spend a lot of time on the presentation explaining all the additional benefits, right? Because the major one is taking a decent project and making it into one of the best projects in North America. And we truly believe that we're going to have one of those top 5 projects in terms of scale and economics. But obviously there's been a great reduction in G&A, the ability to support 2 projects from one single infrastructure. So some of the biggest savings are actually in the environmental baseline and the engineering work. We're talking millions and millions of dollars, but I think it is overshadowed by the difference that will be made on the project itself and the returns that you'll see coming out in the updated PEA.
Great. Thank you very much.
Thanks.
Thanks.